Okay, hey, before we get started, guys, folks, as we just went live, I got to ask you a question. Have you ever been caught in the jaws of this two-headed beast called FOMO and FOMU? Until recently, I didn't know what FOMU was, but today we'll find out how to escape from this two-headed monster that can disrupt and just basically mess up your trading. I am so excited this week, though. Anil is back from India. Welcome back, Anil.
Yes, sir. Thank you. I missed everybody over there.
Yeah, and I'm really looking excited because next week, you got to come back for next week, guys and everybody, because Anil's going to be, we're going to do a face-to-face on how to trade while you're traveling, how to be profitable while you're traveling. So again, hey, wherever you're checking in from, we got a bunch of people online. Just type in where you're coming in. Hey, aloha, Jake. Just say where you're basically dialing in from. I know you're not dialing in, but LinkedIn, because we've got a lot of world travelers out there that are all over the place. Houston, Texas. All right. Mississippi. You're down by Gulfport, Jim, by chance? Got a lot of CB friends down in Gulfport. I used to have a lot of CB friends. Delaware. Hey, Rafe, how you doing? Good to see you. All right. Okay, as you kind of, please do not be shy about utilizing the Omaha, Nebraska, about the chat box. I really appreciate that because that lets us know that, who's out there and all that type of stuff. So, hey, let's dig in and just see what's going on. Anil and I are going to be tackling this vexing issue of FOMO and FOMU as we go through today's session. But first, let's meet the star of today's live stream. And this guy is Jittery Jason. Jittery Jason is all too familiar with the paralysis of FOMO and FOMU. His biggest pain point is the dreaded hesitation at critical trading moments, fearing the twin threats of both missing gains and costly errors. Our biggest question is, will he master the market or will the market master him? So to stay tuned, because we're going to be hitting both of that, both on the technical side and the face-to-face. We're going to get a little bit more into the trading psychology side. But first, let's see what's driving the market this week. A couple of different things is one is the market hits new high, gains fade, Powell speaks. There's a lot of things going on. They didn't like what Jerome Powell had to say today too much. And so the market's responding, S&P holding up, NASDAQ holding up, but the small caps are kind of taking it in, taking a little bit of a beating today. So that's one of the things we're going to be talking about. And another thing that's driving the market is the top stocks, and we've got 5 of them to chat about today. The top stocks are still performing exceptionally well. So we're in an excellent move to the upside that continues to work out. And so, Anil, can you give us a little bit of a hint about how you traded while you were in India? Just a little snippet.
Yeah, the snippet was I had to, before I went, I had to decide some of the strongest stocks I wanted to keep. And my system was going to help. So I kept them and just monitored occasionally. And the other ones, I had some cash, what I needed to do. So I selected the ETFs and just went into the ETFs and sort of forgot about it.
Okay, cool. That works. I mean, I love that. And just kind of forgot about it and let your system work for yourself. And that's fantastic. And so let's go ahead and take a look at the charts of the S&P. So what is going on with the spiders? As you see, the Fed came out on Wednesday, basically said we're not going to raise rates. At the same time, even though the Fed was split, the outcome was that they expect the Fed to lower rates 3 times in 2024. That's very interesting. Now, of course, they always tie it back to, well, it's not a political thing and all that kind of stuff. But, it's not like the government hasn't lied to us before, And so, I mean, and so I don't know if it can be politically motivated or not, but, 3 rate, reductions in rate to take us down to about 4.75. That'd be good for a lot of businesses, especially the real estate business. But what's going on with the S&P? The S&P, let me get my drawing tools up here. And again, if you have a particular stock you do want us to take a look at, you can throw it in there. We may have time to take a look at a couple of your stocks. But on the S&P, what do we have going on? We're up at the top of the Keltner channel. We had a line in here about 514, which was a Fibonacci extension. Now we're pushing on up higher towards this uptrend channel or uptrend line that's been in place for a long time. So are we going to make it all the way up to the 532? Right now, there doesn't look like there's a lot to stop us, but that's the next strong level of resistance that the S&P could turn into. Note, the momentum on the weekly charts is still above the 42 line, and the market forecast is also doing what it typically does when we're in a strong uptrend. It's up above the 80 line and just driving sideways on the weekly chart. That's a really great indication of what's going on with that. And so what am I looking for? I'm not really looking to trade the S&P, but I would basically be wanting to know whenever we get a pullback into the 8-period moving average or down into the lower section of the Keltner channel. And you may be wondering what I'm doing with the Keltner channels. I've modified what I track. It still goes along with my book but I'm looking at the 8-period moving average because and with a 1.5 ATR Keltner channel, and it appears to capture about 95% of the price action. So visually, I can look at that without having to do a lot of calculations and kind of figure out, okay, here's where I'm at, here's where we're likely to go, and also here's where I can plan my moves. And so with that, let's go ahead and jump over here to our next entity, which is the Russell, as represented by IWM. Now, here's what I'm talking about IWM. We came back up, and this is almost like a classic rally attempt. We came down, hit below here and close to the uptrend line off of the 50-day moving average and did a really nice rebound. Fell short on this rally attempt of reaching the past highs. Today, we're getting not quite a bearish reversal signal. Well, it is a bearish reversal signal, not quite a bearish engulfing pattern to the downside. And so we will basically be anticipating a continued pullback. Where's it going to pull back to? Like, we don't know, but we'll watch to see if it's suspect down here at this past low. Note, price action got up into this zone over here. Negative divergence going on both the momentum indicators that I have on the charts today, on the TSI and the market forecast for the week. So if one of the indexes is going to be most hit for a potential downward slide, I would look towards IWM and its leverage ETF TZA to trade to the, as this falls, TZA will be going up. Okay, and The NASDAQ is represented by the Qs. Again, looking very, it is hanging up and holding up very nicely. We came up and hit this high, similar high, slightly above it. But look what's going on over here. Similar type situation. We have negative divergence. We have negative divergence. Go over to the weekly chart. What do we have? We have negative divergence on the TSI as price action to move back up to retest the breakout area. Excuse me. Now, sell off yesterday after a gap up with the news after the Fed. And now we're just kind of stabilizing. The Qs are the strongest of the indexes. And so if you're looking to trade this to the upside, look for a pullback towards the 8-day moving average or maybe even lower. And I'd be looking at trading TQQQ in a situation like that. So what do you think, Anil? What's your verdict on the indexes?
No, indexes, I agree basically what you're saying. On my system, on the triple screen system, everything is holding, including IWM.
Okay, including IWM. So that's okay. So
yeah.
Let's see. Just looking here to see what. Okay, yeah, I've got all the stocks I need, guys. Don't need any more. We may be able to get to these, and so thank you for your input. Let's rest back here and move my drawing tool out of the way. So, hey, for traders like Jason, mastering winning routines is very important. Part of the mastering the routine is to do a review of great stocks, but also a review of the indexes. The index tell us what we can expect from majority of the stocks that are out there. And so if having a great routine is critical, having one will help Jason allay the fears. And we're going to show you how he's going to do that going into the next section. So here's where we're at. This is our P&L from last year, as you can see. And this is for this year. Had an excellent week this week, got filled on a lot of our trades, hit our 10% initial profit targets, and so very pleased with that. Had a couple of specialty trades in there for our AutoPilot trading members, and so we jumped from 7% up to a little bit over 11% profits to date. And so we are now. I'm back ahead of schedule for hitting my 40%. And Anil, I did something that you need to know about. In the past, somebody, Sai, he basically challenged me. He said, "Is my 40% target every year?" He goes, does that turn out to be a cap? In other words, are you capping yourself on your potential gains? And I got to thinking about that. And I go, well, I don't think so, because a 40% gain per year is really healthy, right?
Yep.
But then I got to think to myself, but am I subconsciously saying, don't go any higher? And this may be something we can do on a face-to-face in the future, how we, cap ourselves off. And so I said, I'm going to take the cap off this year. I'll still trade my system. I will basically obey all my rules, but I think I can do better than 40%. I'm going to shoot for somewhere up around the 60 to 70% mark for the year.
Wow, that's great.
Okay. So there, I've said it live. Everybody knows it. And so, if I don't make it, it's okay, because I will have learned one heck of a lot in the process. And so, but I just want to let you know, I have moved the mark. And so, okay, with that, let's go ahead and take a look at what else do we have going on. Oh, it is time for Anil and I to square off. Let's see how we want to do this, Anil. There we go. How about we do, no, let's go the other way. There we go. it is time for our question or our, let's see. Let me get this. So ask the question, is FOMO or FOMU causing you to self-sabotage your trading? So we're going to show you some steps you can take to free yourself of this two-headed monster. So Anil, what's the story on FOMO and FOMU? How does it, how has it impacted you?
FOMO impacted me as long as when I did not have a clear system.
Okay.
Once I had the system and I believed in it, FOMO went away.
Oh, cool. Okay.
FOMO comes only when and I admit that, when I doubt my system that will it work this time?
Right. Okay. Yeah.
And particularly I like your system because you're always buying on pullback. I'm buying when the signal comes.
Yeah, correct.
And that's where I question sometimes will the system work sometime, or like Dennis says, it's going to pull back. And
okay.
That's where the FOMO sometimes can mess me up, but I'm refining the system to overcome that.
Awesome. So yeah, FOMO and FOMU. I wasn't really that familiar with FOMU, but I got to read a little bit more about it. It's the fear of messing up, and I think that can be kind of a natural human reaction in that. Do we trust the system, and do we trust ourselves to execute the system? So FOMO and FOMO, they don't just knock on the door of your trading strategy, but they barge in sometimes uninvited, triggering the pain points that spiral into losing trades. They trigger emotional decision making. That's a biggie. And that's one of the beast's favorite entryways into causing us to have both FOMO and FOMU. The other pain point they hit in is the fear of losing capital. And so the toll extends, beyond the balance sheet and into physical manifestations of sleepless nights, staring at the ceiling, wondering, am I going to get it right this time? And also the tension headaches that can come when the market alerts start to tick off or click off. And in reality, we can almost develop ulcers with basically if we're getting hit with both FOMO and FOMU. So the mindset effects are equally debilitating: a loss of confidence, second guessing every decision, an erosion of our steadfast resolve. FOMO and FOMU can chain you to past missed opportunities while robbing you of the present where the real trades happen. So I've got some suggestions on how to break through from, breaking free is more than a financial necessity. It's a reclaiming the mental and physical well-being. It's a journey back to the heart of why you traded in the first place. So here's some strategies and affirmations on the way you can overcome the psychological drain of FOMO and FOMU. So 1, stay true to your winning process, your winning trading process. That's number 1. An affirmation you could say to yourself: I stick to my trading plan because it's my roadmap to winning. Number 2, keep a cool head. My affirmation here could be: I stay calm and clear-headed, making smart choices, not rushed ones. Number 3, never stop learning. I keep learning. My affirmation in this case would: I keep learning every day to make my trading game even stronger. Number 4, follow the rules. Affirmation: I follow my trading rules every time to keep winning. Number 5, look back to move forward. I look at my past trades to learn and get better, not to get on my pity pot. That's a little add-in for you, okay? 6, create your smart choices. I celebrate your smart choices. I celebrate making smart decisions, not just the ones that make money. And number 7 is know what makes you tick. I understand what drives my trading decisions to stay in control, so that I can stay in control of myself. So those are some thought processes you can go through. And I'll provide, if you want a copy of these affirmations, if you didn't write them down, I'll be glad to provide them for you. Just drop me an email to say, hey, Dennis, send me those affirmations. It's really good. So what do you think of those affirmations there, Anil?
No, they are pretty good. I'm currently going through a book on visualization.
Oh, cool.
And it's pretty much in line. I commend you for doing this.
And so, guys, I just put in the chat box my email address. And so if you want to drop me an email, please do, and we can send you these affirmations. So if you're finding today's session valuable, I encourage you, to take charge of your own trading journey, and also subscribe to the YouTube channel and give us a whole bunch of likes, and forward it to somebody who might be challenged with FOMO and FOMU. So let's take off and take a look at the best stocks. And I'm really excited about this because this is part of the proven winning routine to help Jason get over his jitters. If he will, basically write out your routine. Write out what your routine you're going to follow. I know Anil follows a strict routine. I follow a strict routine that's based off of our written rules. And the more you can do that, the better it is. So knowing where to look for potential stocks is critical. I know Anil and I like trading and looking for stocks in IBD. And today we're going to cover 5 stocks that could basically change your year around. Anil, did you have any of these that you're particularly interested in?
I would pick right now, ServiceNow, and that is because my system has a buy signal today.
Okay.
And it's been an uptrend. The weekly signal's been on for a long time, and it had little leveling out and pullback, and now it looks like it's turning again.
Awesome.
The system is picking it up.
Yeah, I like this. And one of the things I've been working on is, as I said, I've been working with some aspects of utilizing the 8-week moving average over here. And I'm finding it's a great line of demarcation that we're utilizing a lot more with the AutoPilot trading system to define where we want to get in. So from what I'm seeing right now, I could be a buyer of this anywhere from 160 all the way up to where it's at 160, and also so that would be about there. Yeah, that looks pretty good. So would you be a buyer now?
Probably will today.
Okay. So that is excellent. Yeah, that's moving up, and it jumps back up to the top here. That would be awesome. So a couple of the ones I like. Was there any of the other ones that you liked, Anil? So I've got CrowdStrike.
No, I just picked one as the best out of that. The other I'll have to study a little more.
Okay. And so, well, let's go zipping through the rest of these 5, folks. ANET. This has been a pick with the AutoPilot trading members. It's really great that it came out on the we entered this basically coming off of the 8-day moving average earlier on. We hit 10% today. And so I like ANET. It's ANET. It's Arista is the name of the company. Would I buy it right now? No, I would not. I would wait for my pullbacks. Now, my pullback doesn't have to be all the way to the 8, but I've got a nice breakout above the, let's say, 293 area. So this looks very good, like it's getting stronger and moving up from where it's at. And notice how it bounces off the 8-week moving average. Again, a great line of demarcation.
I don't see your chart, Dennis.
Oh, I'm sorry. There we go.
Yep, that's better.
There you go. I cannot see the chart. Okay, so yeah, so really quick, and let me run back, and now I was looking at the chart. This was the one that that Anil was saying. Yeah, and notice how I'm talking about off of the 8-week moving average, a great line of demarcation, or off the 8-week day moving average, also another great place where if the uptrend is going to continue, it should stay above that. But it may come back and retest down a little bit lower in that past support area. ANET, really give you a quickie on this one. See how it's extended, got in down here, and it's bounced up, hit our 10%. We took some profit off the table. The next one is MNDY, Monday.com. So Monday.com also looking very strong. It's in a consolidation pattern and holding the weekly 8-week moving average. That 8-week moving average next week will be about 218.34. So that could be a really great place to look for laying in a trade. And what I'm finding, Anil, is my 8-period moving average, 8-week moving average, corresponds very closely to my 34-day moving average. And it works, and it is really excellent for, and see how the Keltner channel is containing everything, containing all the price action. So when it does get down towards the bottom, if I'm in an uptrend, oftentimes that will lead to a flag pattern that we can take a trade to the upside. So I really am loving how this, minor tweak, it's amazing. Sometimes you just make a little tweak and it changes the outcome of several of our opportunities. So PLTR is another one. So PLTR, it's kind of driving sideways in a horizontal flag, and that's fine. It may come back and retest the breakout area again. It does concern me that we had a breakout above the 8-day moving average here. Let me grab that really quick. Right here. And then we ran up and then sold off. This is kind of a classic failure pattern. But we'll see if it may just continue to basically consolidate down around the 2350 level. That's when it becomes interesting to me for a potential trade on PLTR. Last but not least is one of our favorites from last year, CrowdStrike. It has basically been consolidating and all over the map, but is it starting to solidify where we can start planning some trades with CrowdStrike? And I think the answer to that is yes. Watch it off of the 8-week moving average, which will be next week up about let's call it at 214 to 215, which corresponds right there with the 34-day moving average, which is at 315.6. And this could be, for me right now, could almost be a buy where it's at right now. But I would probably look next week to try to pick it up closer to the 8-week moving average. Jake says that he got in on a pullback to the 20, which was about probably in there somewhere, probably about the 318 level. Am I pretty accurate on that, Jake? And so anyway, okay. So I will throw in there was a couple of stocks that were listed by other folks. Oxy. And so, yeah, Oxy's in a huge horizontal trend, horizontal trend. The move from top to bottom is about 20%. It's closing in on reaching that again. So I wouldn't necessarily buy it now, because I'm still stuck in that range. If it gets up to the top and breaks out, that becomes a different story. On the next one is Uber. Now Uber is one that was on our list from last week for the premium members. And so Uber, again, see how it's struggling getting through this, back through this consolidation highs. So we know there's sellers up here that basically bought when it was up here and are going, if it could just get back up to that high, I will get out. They're probably doing that now. So when those sellers are gone, we should get a good breakout. So Anil, that was a quick and dirty.
No, all five look good, really.
They really do. I mean,
strong stocks.
That's one of the things that we're working on with AutoPilot Trading is I am going to be developing an offering for folks for doing a longer term portfolio where we'll be interested in just buying like 4 or 5 stocks and let them grow over time. That's something that is a missing ingredient that I don't see too many swing trading services talk about. But I think that we want to be a little bit more full service so that we can also talk about wealth building, because wealth building is that legacy we pass to our grandkids, right?
Yep.
Okay. So awesome. So have you ever wondered how you can trade without those nagging fears of missing out or making mistakes? A proven winning system, such as the AutoPilot Trading service, could be your secret weapon, or one that's been tested that's like it. Let's dive into 7 ways you can shield yourself from FOMO and FOMU in with the technical. 1, follow clear rules. With a system that lays out exact steps for every trade, you're never left wondering what to do next. This clarity cuts through the noise and it helps you keep focused and free from anxiety, making snap decisions, or fear you're missing out on something. Number 2, decision based on data, not emotions. Trading with a system means your moves are based on solid data and also solid points on the chart, not fleeting feelings. This approach blocks the emotional swings between FOMO and FOMU that FOMO and FOMO thrive on, which guides your decisions to be more impulsive. This replaces those impulsive decisions. Number 3, a consistent strategy keeps you grounded. Following a tested strategy means you're less likely to get swayed by every new hot tip that pops up. Here, take a look at this stock. My cousin told me about it. It's only 25 cents, but if we buy it now, it's going to go at least to 75 cents. That comes your way. Consistency is a key in trading a proven system, and it helps you stay the course even when FOMO is whispering those temptations. Next, confidence in back-tested success. And that's where I'm talking about. If we have confidence in both knowing that the system is a winning system, but also develop confidence in our own trading. So knowing that your trading system has been back-tested and proven successful offers a huge confidence boost. It's like having a map in unfamiliar territory, giving you the assurance to press on even when doubts creep in. Objective feedbacks on your trade. A robust system provides clear feedback on every trade. Not so that you can sit there and go, oh, darn, I lost money, that type of stuff, but so that you can go, what can I learn? As Mark MNDY says, what can I learn from the trade that I was just in? Number 6, learn what successful trading looks like. Using a proven system is a learning experience also. It teaches you the habits of successful trading. That's one of the things that I always talk about with folks is if for AutoPilot trading members, let us help you learn to be a winning trader. That's my objective and my goal. Building a foundation that makes you less susceptible to the whims of FOMO and the paralysis of FOMU. Lastly, support from like-minded community. There's strength in numbers, and being part of a community that uses the same trading system reinforces your confidence and offers proof that you can trade successfully without succumbing to fear. So imagine, such a confidence and precision. So imagine trading with such confidence and precision that FOMO and FOMU become distant memories. That's what a proven system can do for you. So stay tuned as we witness jittery Jason as he transforms to high performance Jason. So are you ready to take that, to that control like high performance Jason has done and leave those trading fears in the dust? It's all about sticking with your plan, as Mark MNDY talks about here. It's about the discipline of sticking with your plan, especially when the market throws you curveballs. Mark says that the key to success is in the market is to have a plan and stick to it. And he's right. Our friend Jason learned this firsthand by committing to a disciplined plan and managing his emotions. He turned the tables on the two-headed monsters of doubt and fear. So if you'd like to join Jason with a proven system, check out AutoPilot Trading. Take a test flight. We've had a lot of great returns and a lot of great reports from our traders who are trading well. A link will be in the down in the description. So as we get ready to close up, Anil, I just want to say, I'm so glad you're back.
Me too. To be back.
And so what's your thoughts on that, the process, both the psychological, but also the technical process for getting rid of FOMO?
I think psychological and technical both are important, but I'm coming to the point also is psychological is probably has the heavier role.
Yeah. And I agree with you on that. I think after after a person has learned the process and has become a master technical trader, then the larger challenge is mastering their mind.
Absolutely.
So hey, just so special thanks to Anil. Glad he's back. His strategies and insight are a beacon for the rest of us to follow. And so remember, trading is not just about the numbers, it's about the journey. So, the knowledge and community. So aloha, God bless everybody. Let's look forward to more profitable trades and less jittery days ahead. So with that, I'll say good day. And if you're with us, I'll be shutting off the in-stream or the live stream just in a moment, but I've got to read my disclaimer. All materials presented are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital, Past performance is not an indication or promise of future performance. So again, thanks, Anil. We'll see you next week.
Thank you very much.
Mhm.